Hello there, Mavericks. It is December 10th. Let's get into it. We had a little bit of a pullback today, nothing all that serious. In this session, we're going to be talking about the news of the day. We'll go ahead and look at all the commodity markets. And then we're going to take a look at all of our sectors. And of course, we're always looking for setups. I've got two bearish ones, surprisingly. I'm finding many more bears than bulls here and one sideways.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, well, for the final numbers, they were fairly unremarkable. So Dow down basically 1/3%, S&P, NASDAQ all down about 1/3%. That's about it. Oil was flat for the day, but gold had a really nice day. This is a big move for gold, up 1.26. That's adding on to some prior gains from yesterday. So gold and the whole material sector getting a little bit of a bid. If we take a look at the market internals, basically had 2 out of 3 stocks going down today, but we still have the majority of stocks above a 50-day moving average. So everything in here is showing us that the pullback is the name of the game. And today was really a very light news day. There was really no market news whatsoever. But as far as science news go, Google unveiled its new quantum computing chip, Willow, where it actually met some pretty amazing benchmarks. If you are a science and technology nerd, definitely go read about it. It is a really big deal to the next step of computing. And you can see Google had a nice pop on the news, about 6%. So what does all this mean for the charts? Well, let's go ahead and take a look at them. As you can see, the only question I had last week was, well, let's go back to what I said on Friday. I said, I think we're due for a pullback, but it wouldn't surprise me to see a blow off top. Okay, so we didn't get that blow off top, but we're getting this pullback. The only question I had was it going to be a pullback or was it going to be a base where we just stayed up here? And I think you can see for now that it's probably looking like more of a pullback at this point. That being said, we've got some serious support right underneath where we are at 6,020 on the S&P. Look, this could still be considered a high base if it doesn't break this point to where it's telling you it's going to be sitting up in this area. We could be high basing or we could have a pullback. Either one, how you want to label it. If we do break below 6,020, all of a sudden now we are doing some technical damage. The next stop would be the 20-day moving average. And then, of course, down here at the 50-day moving average. We don't know what's going to happen in the future, so we just have to basically adjust to it when it happens. Right now, we are leaning bullish. And yes, it's never fun when you're leaning bullish and you get these pullback days. I get it. It's never fun, but the long-term trends usually take care of everything. So we could get a little bit more pulling back here. I think tomorrow the CPI is coming out. It's either going to bounce, and then we'll take a look at this and be like, oh, that was a great place to buy, or it's going to sell off because of the CPI, and we're probably looking at a little bit deeper pullback. And again, first level is a 60-20. Below that is 6,000. And then below that, probably not down till 5,900. So we'll have to wait and see what happens here on the S&P. NASDAQ's doing the same thing, not quite as deep. And you can see we've got a lot of room until we come down to prior resistance, somewhere around the 515 area on the Qs. 1% down to get to that level. Same thing here for breaks below that 515, 20-day moving average, 50-day moving average. And then again, that would be a trend change below that 50-day moving average. Not a whole lot to take a look at the heat map. You can see Google having a nice day. The chips really sold off today. The chips did get hit. And surprisingly, I found some really good looking shorts on charts in the chip industry. Other than that, lots of salt and pepper, red and green everywhere. What does this mean? Nothing. It's still just a pullback. It's still just a pullback from a new all-time high. We're sitting at a +3. There's nothing you can do. Everything you will make up other than that will be projection of what you think is going to happen or what you want to happen. We have no idea. We're just going to play the technicals This is a pullback. If it finds its support around the 60-20 area and bounces tomorrow, that's great. We'll get back on the long side. I shouldn't say get back on the long side, but we'll be very happy because we are on the long side. If it pulls back more than that, then we'll probably have to make a little bit of adjustments to get a little bit less bullish overall. As far as trades go, I found some decent trades on the long side. A lot of things are pulling back with the market. That's understandable, which means that if the market bounces, then those things will likely bounce. And I didn't find a lot of stuff that was holding up. What I really like to look for in these kind of markets and pullbacks are stocks that are holding up, like holding up at the top of high bases or even breaking out of high bases. I didn't find a ton of that out there. And so it's telling me that maybe it's not a great time to look at longs right here. Obviously with the CPI tomorrow, a big green candle changes everything. But for right here, right now, where we are in this moment of time, I didn't find a ton of long stuff I liked. I did find a ton of short stuff that I liked. And so let's talk about a sideways and two bears here for today. First up here, sideways, is Monster. This is Monster Energy Drink, MNST. You can see had a nice uptrend going, higher highs, higher lows, and then had this. I don't know what that is. Who cares? Doesn't matter. But you could see we came down, pierced that low, came back up, and here we are right down to this low. Looking at this, you can see 52 to 56 is a pretty nice little sideways pattern here. The question is, does it break through the 52? Does it break through that 52? And then all of a sudden, where's the next level? Support down this? Maybe down here under 50. If we take a look at this wide up range here, we can see that we can take a look at a butterfly in this 55 to 50 area, which if we do get a break of that support, but it's not a collapse, then I think this is the right area here. So if they don't have a 52.50 strike, I didn't check this before. If it's only dollar strikes, then maybe we look to do a 50.54. 50.54, which is saying, hey, if it breaks through that support, we think it's ultimately not going to go down much lower than that 50. We want to be in that 50 to 54 range. So that would be a 50, 52, 54 butterfly for December, which is going to be 8 trading days away. Let's jump into the bears. As I said, I found much better bears than longs, and this was the third weakest stock over the past, I believe it was 3 months. VKTX. I know a lot of people say, Rob, if it's already been the weakest, shouldn't we go find something that has been strong? No, that's not how trading works. Relative weakness leads to more weakness. And you can see this thing is just a beautiful pattern here. Big drop, big rally, we came down, tried to bounce off that support, and today we plunged through. Now listen, this is a biotech stock. Anytime you're playing with biotech, you need to understand that these things can move like crazy. They can find the cure to cancer and they'll go up 300%. Or their cure for cancer, the only drug they're working on doesn't work out and they can be cut 90%. I've seen both of those things happen over my 27 years. So you've got to treat every single one of these like that's a possibility, which means we're looking at spreads. Spreads are the best way to control risk. And I like a 45.49 or a 45.50 bear put spread. I think this is a very reasonable trade. You could definitely pick some different strikes, but I think this one is about right. You're probably going to get in about 55% of the spread. So on a $5 spread, you're probably going to pay about $2.30, $2.35. So we're going to have a little bit more upside than risk on this one. But I do like this one. It's been weak for a very long time. And next up is Dell Computer. Dell Computer had a little bit of an earnings miss, as you can see here. We had a drop. And this is what I love. I love this pattern, and we call this pattern the belly flop. We call it the belly flop at Maverick. I didn't have a good name for it years ago, so I opened it up to our group and I said, okay, something that's been in an uptrend, had really bad news, fell hard, and then just sat there for a week or two before falling more. And one of our traders came up with the term the belly flop, and I really liked it. So this is the belly flop pattern. That is not a technical pattern. Don't try to look that up. But it basically is a first stage downtrend where we had something that was in a big uptrend, had some news that dramatically changed it, had a fall, went sideways, base for a while, and then fell out of the bottom of that base. Obviously, you can see big move today, down 5.6%. We just have to take a look at levels here. So we broke through that 120 support. Next level on this is likely to be down here in the 112, 112.50 area. So look, this is where we want to use these levels as some of our targets, or at least not just targets, but maybe worst case scenarios. But remember, this is a stock that has weekly options. It has dollar strikes. We can go in and put together pretty much anything we want here. I mean, you could put together a 114, 117 bear put spread. You can put in a 115, 118, be a little bit less bullish and be a little bit more theta. Look, you can do anything here, but I wouldn't go much past this support at 113. This 113 area is the next level support. So I think that's about as aggressive as you want to get here on a trade with Dell, D-E-L-L. Let's talk about tomorrow. Tomorrow we got the CPI. Now I put here major news in play. The CPI is becoming less and less major as inflation is becoming more and more under control. So again, I read that and I'm like, that's not really major news, but it's definitely news, and it's the only news in a news vacuum, which tends to make it a little bit more important. The expectations are for a +3 on both the headline and the core, which is a little bit elevated, but the year-over-year 2.7 is right where the Fed wants it to be. If this number comes out as expected, I expect the market to really like it, because they are pretty much at like a 90% for the next rate cut, which I believe is next week for another 0.25% rate cut. If these numbers come out a little hot, then I think the market's not going to love that. So let's say headline comes out at 0.3 and the core comes out at 0.4. All of a sudden, people are going to have to take that basically a guaranteed rate cut back a little bit, which is going to mean some repricing. If this number comes in hotter than expected, then I think you do see another down day and probably break through that 60-20 level and head down to that 20-day moving average. If the numbers come out as expected, which is what I expect, or maybe even a little bit better, then I think we do find some support tomorrow. If they come out exactly as expected, I think that's going to be like a 50-50 day as far as a doji. You probably get some sort of dumb doji where it doesn't really give you any resolution whatsoever on whether we're going to hold that level. If the number's a little bit better, I think we do get a green candle tomorrow. Only earnings after the bell tomorrow, Adobe, and that is about it. So CPI, green candle, it's going to be, hey, you know what? The pullback is run its course. So at this point, it's either a pullback or it's either a new swing high or just a return to the highs, which is going to be a high base. If we break that point, then we probably have a little bit more pulling back to do. But ultimately, this market is still bullish. We cannot switch to the bear side until the technicals tell us to, and we are not even remotely close to that. Thanks for joining me. Bye, everyone.